Hello, welcome, namaste to all my viewers. And yes, we are back with another blasting episode. You know one thing, stock market is always a never-ending learning process. That's why we are back with another episode, and this time we have a veteran trader, Marty Chargin sir. He will tell the secret behind his successful story. So please be with us, enjoy this episode, and learn a lot. Thank you very much, Marty, for accepting my request. It's my pleasure to have you there in my show. Thank you very much, Marty.
Thank you for having me. I'm honored to be on Global Trader TV with you.
Oh, thank you. Thank you, sir. Even I'm honored to have you with me. And like the best part when I sent you a request, when I spoke to you, you said, yes, I'm ready. So that's the best part when people, they are ready to spread their knowledge without letting other things like how many subscribers do you have and what all do you do. So I'm really honored that you are there with me. And let's encourage people and let's help people to understand what exactly stock market is, and let's spread the right knowledge.
The stock market knowledge. I'll share with you what I can, right?
Yeah. Definitely.
Yeah.
Okay, so Marty, before begins, well, I just wanted you to please tell us something about stock market, or when did you start it, how did you start it, and why you started. So can you give us a brief idea about it?
Yeah, my dad got me started in the stock market in the 60s. He bought companies like IBM and at that time Standard Oil of Cal, which was bought by Chevron in the late 80s, I believe, just to get me interested, in the market and how, things can grow over time. That was his main interest. He had 7 kids, and I was the only one that took interest in the stock market. So, so he would show me the newspaper in the morning and how the thing moved and everything. So I said, Dad, these things aren't moving very much. I want something that moves a little more. So he bought me a control data, a stock which moved a lot, like 4 and 5 points a day. And then eventually it was bought out by IBM. But that he got me started, and I'm thankful that he did. Yeah.
Wow, that's great. So could you please tell me, at what age you have started this?
When did I start? Yeah, my dad got me involved like when I was 10 years old. Using blue chip companies like IBM and Standard Oil of Cal, which was bought out by Chevron. But yeah, he kind of gravitated towards the blue chip, what safer dividend paying stocks, and later on everybody's got to create their own, we're all unique people, so we have to create our own strategy, which is best for us, so I think that's really important, that people be able to develop a strategy and a system that works for them. So that's what I did, and basically it took me a long time, throughout the 90s to discover, who I was as a trader and an investor. So,
Okay.
but yeah.
That's great. So it took a very long time to understand whether you are a trader or an investor, right?
Right, exactly.
Great.
So,
So I just wanted to know, could you please give us a time frame, like how to define, or maybe how long normally it took to define or to find out whether you are a trader, investor, or a scalper, or a swing trader? How long?
yeah. Yeah, well, like they say, to be a doctor or a lawyer, or an airline pilot, it takes 10,000 hours. Same thing with stock market, I believe, to become really successful at it. You need to take time, and you need to figure out who you are, as a person, and as you age and you evolve with it, your goals might change over time too, because like I said, my dad started me off with dividend paying, blue chip stocks. And then I got involved with day trading,
Okay.
and then swing trading, and like you say, scalping. And it kind of depends on the market. Like 2022 was a really difficult market, to sit there in stocks and just watch it go down every day. So the market dictated that, I do a lot more scalping and don't. Yeah. So yeah, the market will dictate that as well. But if you, if you're a younger person and have a lot of time, the time frame is essentially the most important construct in investing, because if you have the time and you can continually put money in and invest and build a nest egg, that's the best way to use the stock market over time.
Wow,
Yeah.
That's great.
Yeah,
That's great.
yeah.
So you said you have started in the at your early age. So I just wanted to know who was your mentor at that point of time?
Uh, I didn't really have a mentor. I'm self-taught, there's just learning through books. Yeah, this is before YouTube. Yeah, just reading books and just, putting your finger on the stove and getting your finger burned. That'll teach you, not to do that again, right?
Okay.
So that's kind of experience, is the best teacher. And so a lot of experience of just trial and error, and doing a
Okay.
lot of
Great.
reading.
Great.
Yeah, yeah.
Okay. So
So
eventually, you have learned everything from the market. So market is your mentor, right?
yeah, I learned from, reading books, Peter Lynch is one that I'm gravitated towards because,
Okay.
he's got different styles, but he chooses different types of stocks, different market cap sizes, he calls them, big gorillas or smaller stocks. And he's also, he likes retail, you can go in and like know what you own, buy what you know type of thing, so I
Okay.
drive a Ford pickup, so maybe I'll buy Ford stock. Waste management picks up my garbage, so maybe I'll buy some waste management. I write them a check every month. That type of thing,
Okay.
So you got to know the company. Yeah,
Great, great, great.
yeah.
So tell me, if you are a trader, then are you an investor as well, or you are only a
I
trader?
No, I'm definitely a long-term investor
Okay.
in what I would call blue chip stocks who are going to be around for a while. They don't move much, like a Target, a General Mills, a Bristol Myers, I mentioned waste management earlier, dividend paying stocks. They're not the go-go growth stocks, the momentum stocks, but they're safe stocks, and I buy them every month over time. Wells Fargo's another one. But, they go up, they go down, but, they're not real volatile. A growth stock has a life expectancy, a shelf life of about 12 to 24 months. And once they top out, I don't want any part of a growth stock
Okay.
because when they crash
Big
hard,
crash.
and
Yes,
you can lose a lot of money.
okay.
So you need to really watch those carefully. I still watch the other stocks because stocks, companies go out of business, You see blue chip stocks like Eastman Kodak was part of the Dow Jones Industrial
Yes.
Average, and now they're out of business,
Out of
So
business. Yeah, that's true.
yeah, yeah. Yeah, so you
So
always got
for
to watch.
yeah, so for that, I think you are also, like day by day, you are reading the fundamentals as well, the insider information, like, like what the balance sheet is telling you, right?
Yes, yeah, definitely. I believe in see, I don't trade currencies or commodities, because I need a balance sheet, I need earnings reports, I need to see where a company's growing and how their future growth, how do they plan on growing in the future, cash flow, return on equity, that type of thing. So if you're going to invest long-term in a company, you need to dig into their balance sheet and know that they have good
Okay.
fundamentals and potential growth, yeah,
That's
down the road.
great, great, great answer.
Yeah,
So,
yeah.
Marty sir, can you please tell us, like, see, being as an investor, definitely you'd have to read all those things, like in management information team, okay? But
Yes.
being as a trader, do you need to understand even fundamental, or you can do on the basis of price action or chart analysis?
Yeah, no, I don't use fundamentals for trading. That's technical, technical like a bounce off of a moving average, but the holy grail for a trader is like 10%. If I can get 10% on a trade in a day or two, then that allows me to lose 4 or 5% on a couple of trades. So my batting average doesn't have to be real strong. My dog wants to say hi. I told you he wants to go for a walk.
That's the German Shepherd, right?
Yeah, he's a shepherd. Yeah.
Yeah,
Yeah.
great.
Really, he needs some training. He can't be jumping on me like that. Yeah,
No, no, that's fine. That's fine. That's
yeah.
great. Oh,
Yeah, there he is. Yeah, yeah.
that's fine. Oh,
Yeah, I've only had him 3 weeks, so we're both in training.
that's great, 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 great.
Yeah, but just trading, day trading, and swing trading, it's all technical. There's no fundamental.
There
You
is
don't
no
have to know.
fundamental. Okay.
Yeah, you don't need to know what the company's doing. And
Okay, okay, okay.
yeah,
And
it's
that's great. Good to know that. But Marty sir, even I can see that it's something written over there. Never give up. So why?
never give up.
Yeah, from where that? Like, could you please tell us a story behind it?
Yeah, that's my spiritual mentor, Father Jim Mifsud. He passed away in 2010, but he started Never Give Up, and I think he stole it from Winston Churchill. He didn't steal it from Jim Valvano. He was before Jim Valvano. But anyway, that was his motto. He put it on the side of the school and the church. I was a principal there for 20 years, and it was very inspirational to people. They would drive by, and then they would stop in and say, your sign was very inspirational to me, and it, made my day, because I was down and out, and then I saw that sign, and it gave me inspiration. So, yeah, Never Give Up came from Father Jim, and I carry on the message. We did a lot of fundraising for the school after he passed away, and a lot of people gave money and donated in his honor. I started a scholarship program, and we invested money through the stock market and built an endowment fund essentially. Yeah.
Oh, that's great. Very good story.
Yeah.
Great.
Yeah, you can look it up, Google it. You can see the sign on the church there. Yeah.
Definitely. After this interview, definitely, I will search for it.
I should put that on my website. That's a good reminder. Yeah.
Great.
Yeah, no, I believe in it though. You never give up on your family, never give up on your friends, never give up on yourself.
Yeah, that's a very good tagline for anything. People get motivated by this.
Yeah, just don't quit. I know a lot of people, since 2020, they joined the stock market, because it was easy, right? And the fiscal and monetary policy was a little out of control, and you could see how the market went up, and then they drained the liquidity. Now it came down, but a lot of people gave up. They were disillusioned with the easy money in the stock market, and it was so easy. And then last year it became so difficult. So they said, "I'm giving up."
Yeah.
But at MC Stock Charts, we never give up.
True.
Yeah, we never give up.
Okay, so yes, I have a very interesting question right now, which is coming into my mind. Okay, so tell me, for a trader, do we need to see every type of market, like ups and downs and sideways market?
No, not an individual stock. Yeah, you're just trading an individual stock. You're not trading an index, and a stock can, go up or down for whatever reason, a news related item or earnings related, contract related. So yeah, you don't need, just for a day trade, you don't need any of that. Yeah.
Okay, that's great. Do you want to invest in IPOs as well?
Yeah, I do. I watch the IPO market closely. Of course, there hasn't been any IPOs in 2022. Hopefully that'll change in 2023, but it kind of dried up at the end of 2021. But yeah, I definitely watch the IPO market, and I have a book here, but I don't know what I did with it. But yeah, the life cycle trade is a book that I use to identify the different types of IPOs, because some IPOs, they just hit the ground running. As soon as they, launch, they go straight up, and others, they take a long time, like a Snapchat took like 3 years for it to form a base, and then finally, earnings and sales catch up, and then the stock takes off. So there's different types of IPOs, like Google. As soon as Google went public, that stock just took off. There's different types of IPOs. I definitely check the IPO market because every stock at one time is an IPO, right? Yeah.
That's true. So can you please let us know any one stock that you took it at your early age and still you are holding it? You took it when it was came into like an IPO.
No, not an IPO. Like I did have Facebook for a while, and then I'm not going to talk about Facebook. I did have, it was a good stock for a while.
That's
the stocks that I've held the longest, if that's what you're referring to, is probably like Bristol Myers and General Mills. Just steady stocks that I buy them monthly over time, and build a nest egg. And I use the DRIP system, which is the reinvestment program, so it compounds. It buys more stock every quarter, instead of getting a check. And now, I'm going to be 66 this year. I'm going to take a little check. So yeah, it's worked out for me that way. Yeah.
Great. So Marty, you told us that in your early age, you had no mentor. You have self-learned everything from the market. So I just wanted to know, when you are in your drawdown position, how do you tackle that?
When the market's drawing down, yeah, I get real small position sizing, right? Obviously, your long-term investments, you're going to hold those and sit through those and dollar cost average with those long-term investments. But as far as a trader, you got to play real small, and your position sizing is everything. You don't want to get too big when the market's in a downtrend. Now, I was in a downtrend for the whole year of 2022, so I just played small and I played a lot quicker, right? Yeah, it turned me into essentially a day trader in 2022 because I didn't trust the market to hold overnight and then wake up, 5% down or 10% down, which happens.
Yeah.
It happens to everybody. One day I was holding Apple. I think it was beginning of January of 2019, and they, Apple's the blue chip stock of the world, right? They guided down. They warned pre-warning, and the thing was down like 10%. So I had to take the loss. It might even be more than 10%. So I don't like to take more than a 5% loss on any stock. But that day, it just hit me on a downgrade. And whenever I'm down 10%, I just sell and get out, take the loss. Yeah.
So you said in 2022 you are a day trader. So I wanted to
Yeah,
know,
pretty much.
are you a swing trader, day trader, or an investor?
I'm a trend trader, which is essentially a swing trader.
Swing
I
trader.
want to, my holy grail is 10%. If I can make 10% on a trade, then that affords me, a couple of 5% losses. So I don't need a very good batting average to make money. And right now, I mean, the start of 2023, you probably have 4 or 5 stocks that are up more than 10%, so that's, and I start trimming at that point, or just get out of the trade completely. Yeah.
Okay, that's great.
But 10% is the holy grail for a trend trader, a swing trader like myself. And that's, you need a trending market, like last year it was down. So, the short sellers, it was trending for the short sellers. 2023 has started on an uptrend. So, it's been good for 10% trades. Yeah, 10% on a swing trade. Yeah.
Okay. So that's great. So I wanted to know, see, as you are a swing trader and there are multiple stocks in the market. So how do you select, okay, these are the stocks that you need to select? What is the criteria for you?
I use MarketSmith to screen for stocks. And like I say, I want those fundamentals because, a stock's not going to go up just because of a chart. You need some fundamentals, right? You need some earnings growth and sales growth, and yeah. So, but if you're day trading, you just need the technicals. But if you're going to try to hold a growth stock for, 6, 9, 12, 24 months, you need some earnings and some sales growth,
Okay.
And you want those accelerating. Yeah. So the balance sheet, the fundamentals are very important for a growth stock,
Okay. So what do? You said 10% is your holy grail. So if any if any stocks, or anything like which goes above 10%, so do you hold it or you just take your profit and you get out of it?
It depends, like if the market's trending up and you have a stock that's trending higher, you can add, like, say you want to build a 10% position and you bought 5% and it goes up 50%. Now you can add smaller amounts, incremental amounts, and scale in because every time you buy, you're raising your cost basis, right? So you have to buy smaller. Yeah, you want to start big and then incrementally add smaller. If you're trying to hold a stock, like right now, Crocs is one that I'm holding, and it's up like 50% in a pretty short period of time. So you could sell it and just take the profit. Or if you think it's worth more, which I believe it is, then you could buy smaller and try to build a position. And hopefully it should, if they deliver, the quarterly earnings, sales and earnings growth, it should probably appreciate to, I think fair value for that stock is about $160 and it's about 120 now. So I'm going to hold out. I think the value of that stock is about $160. So why should I sell it at 120?
Yeah, that's true. That's true. So basically, you do have pyramiding, right? You do pyramiding, right? Not averaging.
I do. Yeah. On a stock that's trending higher, I will pyramid in. And as you buy, you got to buy smaller as the price gets higher. Okay. Yeah.
That's
because
good.
you're raising your cost
Mhm,
basis for the
mhm.
stock. Yeah.
Yep, yep. Okay. So what do you do if any stock goes against your position? You take out the loss, you cut into the losses and you just get out of it, or you do averaging
Yeah,
as well?
exactly. 5% is, the maximum loss that I want to take. And if I buy a stock and it starts going down right away and it's down 3 or 4%, I'll just sell it because
Okay.
I can always buy it back. I can always.
Even though the fundamental is good, you will just get out of it,
Well,
right?
well, you might be right on the stock, but you might be wrong on the timing of it, right?
Okay.
Like you buy and it goes down, like the stock's still good. It's just you just bought too high. And so I sell it and then buy back at a lower price.
Okay.
And then if the stock goes up, I hold it. But yeah, 5%, I can't.
Okay.
That's why I say you got to know yourself personally. I can't take more than a 5% loss. It hurts me too much.
Okay. So
Yeah,
I
but some people can. Some
yes.
people can sit there and
Yes.
say, I don't
So
care. I like the
even
stock.
I can
Yeah.
say that's your weakness. You cannot take more than 5%. I can say in other
Yeah.
words, right?
Yeah, I'm a coward. I'm a coward. I love
Okay.
my money too much. I can't see it disappear like that.
Great, great, great. Okay, so my next question is, I just wanted to know, like you have started in your early age and you have no
Mhm.
mentor, you have learned everything from the market. So tell us
Mhm.
one example or any big mistake from that you have learned a lot and you are not repeating and you want everybody to follow that rule.
Well, my biggest mistake was Halloween of 2000
Okay.
is October 31st. I had a big position in Crocs and it was a real go-go stock. It had made an IPO and then it had been really jumping and the management team was raising guidance and sales. And I had too big of a position, like 50% position holding into an earnings call. And the stock dropped, I want to say about 40% overnight, so I lost all that gains, and then some. So that's a big mistake, holding too big of a position into an earnings call.
Okay.
But I do believe in holding through earnings, just not that big of a position,
Okay. That's good.
Yeah, yeah. It's too risky. I took on too much risk. Yeah.
Okay, so what I have understood that you have taken over leveraged position, right?
Yeah, position sizing is
Position sizing
important.
is
Like,
matter a lot.
yeah, yeah. Like in 2020 when Tesla was moving, I mean, it was a big part of my portfolio, like 25%, and that's big for me now. I mean, 25% is a quarter of your, investment. So that's a big position
Great, great.
for me. And some people like to go on margin or whatever, but that's not me. I don't do that anymore. And of course, Tesla now has gone straight down. It got overvalued. That's why I'm
Yeah,
talking about these growth stocks. Yeah,
yes,
you have to
yes.
watch them. And so it got overvalued, and now the valuation comes down, and the stock price comes down, and the multiple comes down, the multiple contraction. And so,
Yes, yes.
yeah. As a growth stock trader, you don't want any part of a downtrend like
Great,
that.
great,
Yeah.
great. So, do you believe that, like, if you continuously watching the same stock, then you understand the behavior of that stock and you are master on that?
Yeah, I would definitely say if you're a trader, watch 20 or 25 stocks and get to know their personality. Each stock has its own personality, right? Some of them are, like children. They're all up and down, curtain climbers, right? And others are just real steady and calm. So you need to know the personality of the stock for sure. That's important. Yeah, they have different characteristics.
Great.
I personally like calmer stocks. I don't like the wild ones that go up and down every day. That's yeah.
So you don't like volatile stocks, right?
No, I don't like volatile stocks. A lot of traders like them because you
Yes,
buy
yes,
low and
that's
it
true.
goes up, you sell. Yeah, yeah. A lot of traders like the volatility. I don't like the volatility. I just want a steady trend.
Okay.
Yeah, and there's a lot of stocks now that are trending pretty nicely.
So I can
So
say you like turtle move, slow and steady turtle move, right?
yeah, yeah. Slow and steady wins the race.
Slow
Yeah,
and
yeah.
steady wins the race. Okay,
I
that's
do.
great.
Yeah, yeah.
Oh, wow, lovely, lovely. Okay.
That's just my personality. Like I say, everybody's different.
No, no,
Everybody's different.
even the same is mine.
Yeah.
Even if you go and check my Twitter, even the turtle is there. I am a turtle
Yeah.
trader.
Turtle trader. I'm going to use that one. Yeah, I mean, I used to like those, fast growing volatile stocks up, 10% in the morning and down 10% in the afternoon. but I'm a little older now, so that type of trading doesn't appeal to me at all.
No,
Yeah, yeah,
seriously, even heartbeat pumps like this. Tick, 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 tick.
yeah,
That's true.
yeah.
Okay. So, like, it's been lovely talking to you, Marty. So, my next question is for you. I wanted to know, is mindset really matters in trading market, in stock market?
Oh yeah, your mindset's it's everything, right? Like I say, you have to know yourself. Your personality will dictate your strategies. Of what you can tolerate. Um, like personally, I was a baseball player, and I had a lot of adversity as a youth.
Mm-hmm.
So, in baseball, if you're successful, 3 times out of 10, you're in the Hall of Fame, the greatest player ever. So, you strike out a lot, you pop out a lot. So you kind of get used to that. And so it doesn't really bother me if I buy a stock and I take a small loss on it. Like a lot of people are like really bothered by that mindset. Like, God, every time I buy, I lose money, and it drives them crazy, right? But to me, it's like stocks go up and down. That's part of the game, right? So you're gonna strike out a lot. What I want to do is hit some home runs, though. So you have to be in the market, right? You have to be in the
Yes,
market
that's
to
true.
do that,
True,
right?
true.
So I'm always in the market. I'm never out of the market. So
Okay.
I'm always probing, different sectors, and like the technology sector was, been kind of bad lately, and there's been other sectors that they've been selling technology and buying some other sectors like biotech, and oil and gas was real good in 2022. So yeah, just always probing and trying to find the groups that are working, and
Great,
yeah.
great, great, great. So, Marty, could you please let us know? I forgot that question. What was that?
My saying is no brains, no headaches, right? If you don't if you don't use your brain, you don't have any headaches, right? So I try to
Okay.
just be dumb.
No, no, that's good.
Yeah,
Well, even you're like,
which I'm good
I
at.
am the dumbest guy. I believe that I am the dumbest guy. I don't know anything, but still I'm trying my best to understand everything.
Oh, we're all learning every day. I mean,
Yes.
constantly. Nobody
True.
knows
True.
everything about the
True.
market. I mean, because it's constantly changing.
Yeah,
So,
that's true.
yeah, yeah. Anybody who says they know it all, run away from them real fast. We always have something to learn. Yeah, that's
Definitely.
part of never give up, right?
Yeah.
Never give
That's
up on
that's why even
learning,
I
right?
liked it. Never give up.
Don't give up on learning.
Okay. So my next question is, see, emotion and greed is the biggest enemy of every trader. So I
Yeah.
wanted you to teach us or tell us that what we can do to control emotion and control greed, because that is the biggest
Okay.
enemy as per me.
Okay. Fear and greed
Yes.
rule the market, right? And fear is a stronger emotion than greed, right? That's why the market goes up slowly and then falls off real fast, right? It crashes, right? Because everybody gets fearful. And so you need to develop for yourself a strategy with rules to control your emotions, right? So a stock goes up, 10%, I want to buy it because it's going higher. That's emotion, right? That's greed. You want to have rules like I'm going to buy this stock as it comes out of a base, or if it bounces off of a moving average. You have to have your own strategy, what works for you, what works best for you. And so if you have a strategy, you have rules based like guardrails to kind of guard you and guide you through the market, that will help to control emotions. But we're emotional people, we're human beings. We have emotions.
True.
You don't deny that, you're going to be emotional with the market, but if you use your strategy, use your rules and your guidelines, that will help guide you through the market,
That's
in
true.
good times and bad. Yeah.
So
But
yeah, please
like
continue.
yeah, that fear thing is real. That's why you see the crashes. It's a real strong emotion. And that's why you see sometimes people panic, sell like, oh, it's down 10%. I got to get rid of it. The market's crashing. So you got to, avoid that and just use your rules. Use your rules.
Okay. So do you believe to put stop loss when you take a trade?
Yeah, especially, yes, definitely. I put stop loss. Let's say you buy a stock at $50, right? Well, I don't want to lose more than 5%, right? So I put a stop loss like at 48 or 47.50. So just to ensure that, I don't lose it. And a lot of times it'll hit it
Yes, that's
and
the
then bounce up.
yeah.
And you go,
That's
oh
common
man, I
everywhere.
got I got shaken out and they took my money and then the stock went higher. And that's going to happen. Yeah, yeah.
Yeah,
That's
that's
going to
true, true,
happen.
true. Okay.
Yeah.
So, like you have mentioned strategy. So could you please let us know how long it took for you to create one best strategy for you?
Like I have many strategies. And like I said, if you're, it depends on your age. Like I say, I'm a long-term investor and I'm also a swing trader. And last year I got even more into day trading. So I have many different strategies. Like I say, you can use the market for your needs, whatever you need out of the market, so that's up to each individual. For me, like I say, I'm 66 and I'm not going to take big losses at my age, so my strategy is to kind of be a swing trader and not take those big losses, right now. Yeah.
Okay. So so in today's days, if I go and search in YouTube, if I'm a new trader, I will have a
Yeah.
lot of strategies. And if I
Yeah.
start trying every single strategy at some point of time, I will blow my account. So how to minimize that?
Yeah, you need to, what you really don't want to do is try
Protect our
lots of
capital
different
always.
strategies. Yeah, build one for yourself that works for you. And you have to write these things down. You have to journal. I have a post analysis, which I do after every trade, right? It's like,
Yes.
why did I buy this stock? What was the reason for it? What was my sizing position? Why did I lose money? Why did I make money? So you kind of understand. You really need to
Wow.
journal that. Yeah,
So
yeah.
even
I
you
have it
do
on.
today's even you do the same thing, right? Still you
Oh,
do
I
it.
do it every. Yeah,
Wow,
yeah.
that's
And I
great.
share that on my website with my
Yes.
people who
Yes. No, in
subscribe.
Twitter
Yeah.
I used to see every day. You always post something about the crux.
Yeah. Oh, yeah. I post on Twitter every day. Some type of stock, right? Just something to engage with people. Yeah.
Yes.
I love engaging with people on Twitter. Yeah.
Great, great. Okay. So my next question is, suppose your portfolio is in red. How do you motivate yourself?
That's a good point that you bring up because a lot of people who started in 2020, they put pressure on themselves to make money every day. Like I lost $100 today, or I made $100. That's putting too much pressure on yourself. I don't really audit myself until the end of the month or sometimes the end of the quarter. Like last year, I'm going like, you put too much pressure on yourself when you're trying to make money every day. If I lose money in a trade, say like I'm holding 3 or 4 stocks and the market's down and they're down for the day, it doesn't really bother me that much. Like I said, I'll sell if it's a 5% loss, but you got to expect some down days. The market's not going to go up every day. Your stock's not going to go up every day. You're not going to make profits every day. You have to figure out, what that stock, the value of that stock is, how it's growing, how do they plan to grow in the future, what the value of the stock is. If you're holding a stock, you bought it at $20 and you think it's worth $100, that's not going to happen overnight. It's not going to go to 100 overnight. There's going to be some down days that'll go up to 25, then down to 22, then up to 28, then down to 25. So it takes time. So you're not going to make money every day. You're not going to make money every week or even every month.
Yes.
So stocks go up and down and you need to be a little more tolerant. So it goes back to, I don't get my mindset. I don't get down on myself or I don't need to motivate myself. Because I understand that stocks go up and down and I've taken losses
So
over time.
I can say you are used to, so it does not bother you. You don't bother you,
Yeah.
right?
Yeah. Like today, I think the market was down at the open. It's like, okay, the stocks are going down today. I've had a good week. So, you got to give some back, right? Everybody's got to eat. The bears got to eat. The
Yes.
bulls got to eat. Everybody's got to eat.
That's
So,
true. That's true.
yeah, yeah,
Very true. Very true. Okay, my
yeah.
next question is for you. To make big money, do you require big money? I mean, if you wanted to make good amount, so even you wanted to come in stock market with big money or big amount.
Yeah. Yeah. Everybody wants to make generational wealth without any risk. Yeah, you have to take risk. It doesn't require big money, but it will require big time. If you have big money, then you can do it in little time. But if you have little money, it's going to take more time. And so, yeah, you can definitely do it. Heck, if I can do it, anybody can do it. It's just going to take time, and you're going to have to buy and sell and trade a lot of stocks over time. If you look at the Forbes 400 richest people, they're all stock owners, right? Right? They're all, So, but it takes time,
Okay.
so yeah, you can definitely build wealth in the market, but it takes
It
time.
takes time.
And
Okay.
don't expect it in a year or 2 years, give yourself a chance to build, over
Wow.
time. Yeah.
Yeah.
Yeah. Yeah. These guys who promise, they're going to make in 1 week, you're going to be, buying an island, that's not reality in the stock market. No.
No, no, no. Even, in Indians, there are somebody who claims, like next year I will buy an
Yeah.
airline or maybe some car.
Yeah.
There are
Yeah.
somebody.
Well, we talked about that earlier. There's a lot of pump and dump
Yeah.
scams out there, for people. So you got to be careful,
Yeah, that's true. That's true.
Yeah.
Okay.
Yeah.
Okay. So this is very interesting question for you. Okay. Be ready for it. My question is, if there is time machine, and if I tell you to correct your one mistake, what would that be?
In the 90s, I was a day trader. I was a teacher at the time, and there was a stock called Qualcomm, and it was going up like crazy. They did they had the chips. It was a chip maker out of San Diego, and I was day trading it. Every day I would, make my $100 like I was talking about earlier. Trying to make my $100 every day. And at the end of the year, the Qualcomm went up, I don't know, 5,000% or something. And I had made, little peanuts, right? What if I would have just bought the stock and held the stock or kept buying it all through 1998, 99? I wouldn't have had to teach anymore. I could have bought the school. So I was a big dummy. I thought I was smart day trading, and that's really when I stopped day trading and became more of a swing trader. Like, gosh, you're a big dummy. You could have been really wealthy off of Qualcomm. I had the right stock,
Yes, yes.
but I didn't have the right strategy.
That's
Yeah.
very true, very true. Okay,
Yeah.
so I have a very good question. Who can
All
make,
your questions are good.
yeah, who can, who can make big money? A swing trader or day trader?
Wow. Day trading is really hard to make big money. I think, you can make small increments, those people who want to make, $100 every day, just day trading. I would say, my wheelhouse is buying a stock, at a lower price and watching it grow, a growth stock in an uptrending market for 12 to 24 months. And if you look at some of those stocks from 2020, like Teladoc and Zoom and Peloton, they made, I think they went up for like 8 or 9 or 10 months, but you could make a lot of money in a short period of time holding those stocks. Livongo was another one, and Fastly and Cloudflare. There was a lot of those stocks in a short period of time.
Okay.
The growth stocks. Yeah, you can make money on those, and I think that's the best way to make money. Obviously, a stock like Apple. I don't know if I told you a story about Apple. My sister retired from AT&T, and she put all of her money into Apple. And she had worked there 40 years and built this nest egg of about $750,000. She put it all into Apple. I'm telling her, you're crazy. Because it's too much risk, and she didn't care because she used Apple Watch, Apple iPhone, Apple. Yeah. She was all Apple. So, and of course, it worked out for her, and she turned out with about $8 million, and so you got to pay taxes on that. So yeah, she's frugal. She still won't sell any of it, but yeah, so that's another way to make money. But those stocks like Apple and Amazon and Google, they're pretty rare. They don't come around very often.
That's
yeah.
true.
Yeah, mostly for a growth stock, it's like 9 to 24 months. They really have their go-go years, and then they crash, and you don't want any part of them. Yeah.
Oh, that's true. That's true.
Yeah.
Wow.
Yeah.
Okay. My next question is, do you prefer to watch news, or do you trade based on news or any event?
No, I am a news junkie, though. I listen to the news and I want to be informed. I subscribe to like 5 different services because I want information. I just want ideas. That's all. And then I do my own due diligence. But yeah, you watch the news, and what happens is a stock will usually go up before the news hits. If you look at a chart, you'll see it go up, and then, here's the event, the news event. And that's why the saying is buy the rumor and sell the news, because usually by the time the news hits, everybody's getting out. Like, we already know that. That's old news, By the time you hear it, the market already knows it.
Yeah,
So
that's true.
yeah, so I don't trade based on news event. Or an earnings event though I will. Like if a company is you know, surprising to the upside with their sales and their earnings and business is going well, because the institutions they who support the stock and buy the stock, they have to change their models. Like we thought this company was going to earn $2 a share, and now they're earning $4 a share. So now that's why you get upgrades, and because they figure their models and figure out that the stock's worth more than they had originally thought. So I do buy on those earnings jumps, and usually what I look for is a jump of 10% or more with 200% or more of the average daily volume. If you see stocks jumping like that, it's the old Darvis. I don't know if you're familiar with Nicholas Darvis.
No.
His boxes, when they jump out of the box. I will buy those stocks based on a news event, which is earnings, which fuels stock price, right? Yeah, more earnings, higher price of the stock. Yeah.
Great,
Mm-hmm.
great. No, that's good to know that. It's been
Yeah.
lovely talking to you, even though. Okay, so
Yeah.
there are a few more questions. Let's continue. There are 2 to 3 more questions. Okay.
Take your time.
Okay, so tell us, like, do you do homework before taking any trade or any anything? Like, is homework
Yeah, I
is
do.
homework is necessary?
Yeah, I do a lot of homework. That's essential for the stock market. I know I do a lot on the weekends and nights. I have a service, so I'm always digging around, screening for different stocks. But I need to know if I'm going to get into a stock, I need to know a lot about it. Where is the future growth coming from? Like you can see, their past growth, right? You can go to any webcast and listen to their presentation and look at their slides, but where are their future earnings coming from is what's important. So I do a lot of homework on any stock that I'm interested in. But I try to keep it minimal, to a minimum of 25, 30 stocks. I don't like to have, thousands of stocks that I have to investigate. So yeah. And I usually do it by sector, groups, stronger groups. Like right now, biotech, oil and gas, the ones that are in favor of materials, mining, the stocks that are strong, materials, and the stocks that are weak, like technology, I won't. I don't want any part of that right now, but that could change, could change. You got to be flexible in the stock market.
Yeah.
That's like the number one thing is being flexible,
Be
like
flexible.
being able to, you blow like a palm tree, right?
Yeah, that's true.
Or you switch like a stoplight because you're going to change your mind based on, new information coming in,
That's true.
Yeah.
Very true. Okay, that's great. Now, next question is discipline. To be a good trader, to be, to earn something from the market, you have to be a good disciplined trader, right? So how do you manage, or what do you do to be a disciplined trader?
No, you can get lucky. You can get lucky every now and then, but to be successful over a long period of time, you need to study. You need to do your homework. Like I say, you need to know the personality of stocks. You need to know yourself. And you need to have those, like I talked about earlier, your guidelines. You have to have your strategy that works for you, individually. We're all unique individuals. We all have our own, like I can't tolerate some things where other people can, so so you need a strategy that's fit for you, and you need to know who you are. And like I say, it takes 10,000 hours of practice to be a good airline pilot or a doctor or a lawyer. So you need to put in the time. Tiger Woods talks about it all the time. Golf, you can't just go out there and be a good golfer. You need to put in time, hours and hours and hours of practice.
No, that's
so,
very true.
Yeah, to be adept at anything, to build your skills, you need to dig in and do the work. Yeah, nothing comes easy.
That's very true.
Nothing comes easy in life, and it's same in the stock market.
That's very true. Okay.
Yeah.
That's a very good answer, and even I liked it a lot.
Yeah.
So my next question is for you. How long do you invest, or how long do you watch your screen while day trading, or maybe, do you watch your screen when you was doing a day trading?
When I'm day trading, I watch the screen. That's why I don't like day trading, because it's pretty stressful for me, because I'm my style, of day trading is, yeah, you have to watch the screen, and you have to take profits when you have them. So if you wait, you might not have any profits. So yeah, when I'm day trading, I watch the screens all day.
Okay.
And that's why I don't like it. I like to go out and golf or walk my dog or whatever. So I like swing trading, and there's a couple of stocks now that I'm trading and holding that are doing well. So I'm not watching them today. So I expect them to be down today, and maybe next week they'll pick back up. So yeah,
That's true.
yeah.
Okay.
I don't recommend day trading. I think it's stressful.
That's true. That's
Yeah.
and not everybody can be a day trader.
No,
Not
no,
everybody.
no.
Out of
No, I don't
1%,
condone
there
day
will be
trading.
0.1% people will be there. Those they are best at day trading. Not everybody.
Yeah. Oh, I think you make the most money long-term investing,
That's true.
and trading those, growth stocks at 12 to 24 months, holding them. Yeah.
That's true.
I think that's, yeah.
Okay. And my next question is, what is your minimum risk reward ratio per trade? Whenever you take the trade, what is your risk reward ratio?
Well, my math is I want at least a 2-to-1 ratio, right? Like I want a 10% gain and a 5% loss. And like I say, with that math, I don't have to have much of a batting average. If I'm batting 50%, I'm killing it in the stock market. If you keep your losses, 4 or 5% and you get those 10% gains, sometimes you get 20, 25. Like I said, right now I'm sitting on Crocs at 50% gain in a short period of time. So that allows me a lot of losses. But normally, in a normal market, I'll take a 2-to-1.
Okay.
2-to-1 ratio. Yeah. Some people like 3-to-1, 15%, if you can get it, great. But that's mine, 10%. If I take 10% and lose 5, then, if I bat 500, then I'm doing great. Even if I bat 400, I'm still making money in the market. Yeah.
Okay. So could you please let us know what is the ideal percentage annual return for trading? Like if you are a swing trader, what is like 12%, 15%, 30%?
Well, that depends on each year, on the market, right? Like last year was a real tough year. A lot of people took losses in 2022. But I sat on a steering committee for a teacher's pension plan. It was like $500 million plan. And we had, they have guidelines for each company to manage the asset managers, right? And their benchmark was just the S&P. If you beat the S&P 500, then you've had a good year. If you don't beat the S&P, which a lot of them don't, then you might get fired. So that's a good benchmark. If you can beat the S&P 500, I think that's good for any trader, and then, you could see the NASDAQ, from 2012 to 2020 was up, a lot of different years. So if you could beat the index, the S&P or the NASDAQ, and you were having good years, if you don't beat them, then, not so good, right?
That's
Just go buy an index fund, right? Yeah.
No, that's true. That's very true.
Yeah.
Well, Marty, it's been really lovely talking to you. But yes, before you go, I wanted you to please know our viewers or anybody, like if you wanted to be, if you are a newbie trader or if you are a loss-making trader, so what they should do or what they should develop in themselves so that only they will be a good trader, good money-making trader.
They should subscribe to my service, mcstockcharts.com, or watch Global Trader TV.
Oh, that's amazing. That's so nice of you. That's great.
Yeah, no, I think the most important thing, of course, I mentioned be flexible in the market, but you have to know yourself. That's important, and you're going to have to spend a lot of time. Now, fortunately, you do have YouTube, so you can watch and learn and develop strategies. I had to read books and things like that. But yeah, know yourself as a trader, become educated. Knowledge is power, right? So the more knowledge you have, the more knowledge you have about the market and about stocks, and the more knowledge you have about yourself, the more successful you will be in the stock market. And you need to exhibit patience and flexibility and just keep learning. We're always learning. I'm learning every day.
Wow.
And trying to become better. Yeah, and I'm sure you are too.
Definitely.
Well, just trying to become better. I have 4 pillars in life. I got to mention 4 pillars. You got to earn money, get a job, earn money. I don't care what it was. I started as a paper boy.
Okay.
And yeah, you earn money. If you're flipping burgers or if you're a doctor or a lawyer and making lots of money, it doesn't matter. It's how much you save. So you earn money and then you save money. And the third pillar is once you save that money, you invest the money. And over time, you're going to do very well investing. If you have that time from your 20s, 30s, 40s, 50s, you've got 40, 50 years in the market's going to go higher over
Yes.
time. So you're going to do well. And then my fourth pillar is after investing and making all that millions of dollars, you're going to give back to charity.
Oh,
So
wow.
you have to give back to people.
Very
Yeah,
true.
yeah.
Very true.
Donate. Yeah, donate. It's a good tax write-off. And you help others, you help others. So yeah.
Very true.
So that's my four pillars, right?
Wow.
Earn, save, invest, and donate. Yeah.
Yes. Earn,
Yeah,
save, invest, and donate at the end.
Donate. Yeah.
Wow, that's amazing, amazing, amazing.
And never give up.
Never give up. Yes.
Yeah. And have fun doing it, right?
wow.
Enjoy life. Yeah. Have fun.
Great. So
Enjoy life.
apart from trading, like apart from
Yeah.
what do you do? Apart from trading, like do you watch movies, wrestlings, or you watch any episodes?
I golf a lot. Yeah, I like to watch movies. Netflix at night, Netflix with my wife, and my dog. We sit there and watch movies.
Oh, wow.
So yeah, I like to read. I read a lot. I'm a voracious reader.
Okay.
And so I watch movies and I read and I golf during the day and I walk my dog. I hike a lot.
Uh-huh.
When I lived in California, we used to surf and hike in the hills, but now I moved to Arizona.
Okay.
I golf and hike. They have really nice hiking trails here. Except you have to watch out for rattlesnakes. Yeah. But, it's really, you got to be active, right? You can't always
Yes.
have your mind on the stock market. So you need some sort of outlet for yourself. It's just a healthy balance of life, right?
Oh, that's
Enjoy yourself. Yeah.
Great.
No,
Marty, it's been really lovely talking to you and definitely looking forward, and definitely in future, if there would be anything else, I would request you to please let us know, give us few more. I will arrange something for you so that you can come up to India, and definitely we'll have a biggest event, and definitely we'll do something better for the people.
Oh, we would love to see Global Trader TV when my wife and I visit India and come see you and enjoy your country.
Definitely.
You have a lovely country.
Definitely.
Thank you for having
Namaste.
me. Namaste. Yeah, that's another thing. I do yoga like 3 or 4 times a week. Yeah.
Okay.
Yeah. America's kind of they've kind of ruined yoga. they morphed it into what it works for them, kind of like the stock market. You use it for how you use it, but I know it's a little different in India than it is in America. Yeah.
Yoga's everything has been copied from India itself. So as a
Yeah.
that's true.
It has. I know. I don't think. Don't get me started, but yeah, I see the women in the gym doing the yoga and the sweaty, the hot yoga. The sweating and doing the workouts and upside down, and standing on their heads. Yeah, it's a little different in America. Yeah.
Okay, so bye-bye, Marty. Take care.
Thank you for having me. Peace. Never give
Never
up.
give up. Okay, bye-bye.
Have a good day.